What's up, everybody? Welcome aboard to Trading Live with Bubba, and it is Tuesday the 6th, and of course, markets are higher this morning after yesterday's big sell-off. But don't forget, you did see a fairly big rally come late in the day. I suspected we'd see a rally. We had a big rally overnight that failed, and now we're starting to run up again. There hasn't been a lot of action. It's been slow. There has not been a lot of trade. There was an earlier trade in the 10-year, which was, again, certainly potential if you wanted to take it. And again, I don't talk about trades that I didn't take, but right now we're looking at not much action right now. Okay. So it's fairly slow. And if you remember, we need volume and price to be moving at the same time, which is generally creates that blow off position. So we'll take a look over and start looking at what we normally look at during the day and get a viewpoint for where everything is. And of course, Apple, which is extremely oversold and actually got hammered this morning down to about 200 and now is coming back again. So these are things you want to look for. These are very high probability trades. And especially with the volatility where it's at right now. And I do want to cover that first. I'm mixing around a little bit, but you knew yesterday that if you had stuff to sell, then the best time to sell it was right off the opening yesterday, because again, volatility was at 66%, which is a joke. And you knew that had to come down. And now we're seeing it come back down into the mid 20s, which is obviously perpetrating the rally here. But anytime you see this kind of spike in volatility, it's time to unload some premium. Or if you have long positions on, either puts or calls, because they're both going to expand. But if you have an opportunity to take that price right at the opening, because you know that volatility cannot sustain at those levels. And if you don't believe me, go back and look at 2008. Okay. Actually, volatility spiked in October of 08. Okay. And even though the markets went down another 50% in 08, the volatility continued to fall. And when it got so low, that's why March of 09 was a very good indication that the markets were ready to turn and rally again. But again, just a little bit of note of how to use volatility. Options are always fairly priced, except when they're expensive. They're never cheap. They can get expensive. And then we know that the markets are expecting much bigger movement. But as you can see, that volatility is collapsing already. So what was high yesterday, if you had just sold, would be much cheaper today. Okay. But anyway, so back to Apple. Again, probably nothing to do right now, although it is still kind of oversold. But certainly I would wait now and see it would come back. It's already come back. From the 195 low yesterday, from the 200 low. But it's certainly, if I were looking to trade Apple from here, I would be certainly looking potentially to the long side. But really, I'm not looking at anything right now. I am personally short Apple, as I will always disclose my overall position to you. Amazon, again, very oversold, getting a little bit of a pop this morning, but still in those oversold conditions. And certainly, you could look at selling some put spreads here. Now you have two choices on how you want to sell put spreads. You can either sell them in the money and create a call, or just sell them out of the money and try to collect some premium. Okay. So what I would look at, in Amazon is probably trying to sell the 155 or whatever. And let's just see what that would yield us right now. And just to give you an idea what I'm looking for, because I don't sell cheap premium. I'm looking, if I'm going to do it, I got to get approximately 40 cents per dollar. Okay. That's how I like to sell it. And this is way short. Okay. Well, not way short, but it's short enough that I would not get involved here. If I were going to go to Amazon, I would probably go right to I'd go right at the money at the 162.50. Okay. That gives me 150, 160. Let me just see what this looks like. This is right there. So that's about 40 cents per dollar. I want 40%. That's the bottom line. Anytime I'm collecting credit, I'm trying to get 40% on the dollar. I don't believe in that high probability shit, because when it moves too fast, you get screwed anyway. So you might as well make sure, if you're playing something that's a 65% favorite and you're getting 40%, that means you're a net 5% winner over time. But anyways, so I would look potentially to Amazon. Bido, again, very oversold as Bitcoin is. We can see that for sure as well. Okay, and there's a lot of things to look at. Hold on one second. Pam, I got a number. Do you need it? Oh, your vote. Oh, it's been updated. Okay, I'm sorry. Anyway, sorry guys. Anyways, So again, here, if you believe in Bitcoin, this is probably a pretty good spot to take advantage of the crypto market here. Let's just go back and make sure I'm not missing anything here. And you can see no volume, no place. Okay, potentially gold could get somewhere if it would rally from here. Gold would probably have to rally up to here for me to want to look at to sell it. Okay, but right now that's what I'd be looking for. But there is any volume anywhere else right now. So again, you're not creating right now any trades that are filled with emotion. And that's, as a trader, you are looking for emotion. You're trying to play against those that get emotional about markets. Just like yesterday, when everybody was panicking and selling into the open, that was a very good time to be a buyer. I'm not going to say it's always going to work, but that's the objective, because the probabilities were much higher in your favor to be a buyer yesterday, okay, into that very deep sell-off, okay? Now, again, of course, when you get into those very fast markets, your risk model has to change as well. You will have to take a little bit more risk, but in the meantime, we'll see. And of course, coin, which is extremely oversold, has come back nicely. It got down to almost 160 yesterday, okay? Crowd has been, coming back off, but still, it's still oversold. Again, when they're oversold, usually until they reach the mean, they're a potential play. But do remember this, that if you're using the Bollinger Bands as I'm using here, as you can see, the mean continues to come down. And if this stays down, the mean will continue to come down. So even if you actually bought at oversold conditions, the mean could actually go below that before you could actually get out. So again, it's not quite that simple, but what we're looking for here is a high probability opportunity. Okay. Meta, which if you remember last week, I told you I would sell it if it rallied on earnings. It did, and I sold it. And of course, you can see it went all the way down. A pretty good opportunity. Now we're just back right to the mean. Okay. Google, getting a little bit overdone here. I think Google is probably one of the better trades right here. You're down near about support, and you could expect a potential rally here. They've had a little bit of bad news with the monopoly status, so that has helped. Although everything else is a little bit higher today, that might have kept some pressure. But I would expect that to be an opportunity for you to go ahead. In fact, let me go look up here, and I might put a trade on right now while we're together. GL. And let's see here. What do we got here? Google's at 159. So if I look at for the 9th, 157.50, 155. Okay, this is a little bit thin, but I'm going to go ahead and sell it for 80 cents. Okay. Wait a second. What happened here? Hold on 1 second. I screwed something up here. Give me 1 second. Let me start over. 1, 2, 1, 2. Okay. So I'm going to sell this for 70-cent credit. It's a little bit less than I'd like to, but I do like the trade. So I'm going to go ahead and do that trade. Okay. Sell the Google 157.50, 155 put spread for Friday. Okay. So I've got a big cushion to go with. IWM, again, oversold, but it has, again, a lot of them have already come back a fairly good percentage. So it's something, again, we're going to need some more activity in this market before we want to get overly involved once again. Gold might be giving us a potential trade here. We're going to let it trade out. This was close, but there wasn't enough price action. So, but now you're starting to see it tank once again. So let's see what that'll look like. Okay. And okay, so let's watch this for a minute here and see what it looks like. Actually, I got some time, so let me go flip back here so we don't run out of time, and at least we can get through. Moderna is really oversold. Okay, this would be, and this kind of looks like a kind of bottom, probably a pretty good spot to sell some put spreads. Microsoft is already coming back from that oversold market. So again, look for this probably to continue to rally. NVIDIA, okay, look at that. That was like almost picture perfect. And again, I do own NVIDIA. I'm actually hedging. So we rolled a lot of our spreads yesterday, which was great, and bought some more stock. The Qs, again, same. You're seeing a very similar picture. Obviously, yesterday was a Sell everything. Ask questions later, but sell everything now. Okay. And let's see. I don't think this is going to get there, but we'll continue to watch for just a minute to see. Crude's got a chance. But what you're really not seeing here in this market here is you're not seeing very much speed. Okay. And that is something that is important for what we're doing, is the speed of a market indicates that there's more emotion playing out in it. And I think that's something that you want to alert yourself to and be prepared for, because I believe that's a very important part of what we do. Okay. And so when you look, you want to see a little bit faster action, either going up or down. It doesn't matter. We don't care which way it's going. We just want to be able to participate. Okay. So crude is going to be very close. We'll take a look at that probably. Gold, I don't know. I don't think it's going to get there. And I'm certainly not willing to take the amount of risk I'm going to have to take to get there with it. But I think crude is going to be a trade. So I'm going to go ahead and flip over now to the secondary time frame. Okay, so right now, crude's going down. Okay, so our stop would be, as we look right now, our stop would be at 72.61. But we have no entry yet anyways. I mean, we have to wait. But our stop would be 72.61. Okay, now we're waiting for a green bar to appear so that we can step in and buy it. And I'd say we'd want to be a buyer at 28 or above, so it would confirm. But right now it's still not a trade. Now it's going down again, so not much to do. Here we are. So we got to wait. You got to wait till the bar closes to participate, because whatever, the pluses or minuses, depending on what side you're going on, don't really matter. 27, there's no, so 28 or above is where I want to buy it. And right now it's not even a buy. It's not even close to being a buy. Okay. So again, we'll see what it looks like. And no. So we're going to wait for the next bar. And let's just see if anything else is happening while we're waiting for crude to maybe be something. No. Okay. So now we're going to wait again and see. Our stop is now going to be 73.61. I mean, 72.61 still. 72.60, 72.59. So now we're waiting. So now our entry can be lower, and look at it go. See, there's a little bit of action there, a little bit of potential panic sell. I'm not saying that it's panic, but it's potential. Okay, which is exactly what we're looking for to get in. Now we have no trade yet. We're gonna have to wait. But that's the objective here. In the meantime, the stop's going to be 72.37, but we have no trade here yet. We're still waiting. Okay. And you can probably see it's back to back. And of course, nothing else is really moving. So that's okay. One trade's good. We had 3 for 3 this morning with the live group. So that's okay. So now the question you're going to ask yourself, your stop's going to be 72.37. Now you're going to have to assess the amount of risk that you're willing to take on this trade. Normally, about 80 ticks is about what I'm willing to take. Again, if it's faster, I'm willing to take a little bit more. The more action in the market, the more risk I'm willing to take. But again, that's where you have to make your decision. Does it make sense for you to take, for right now, for example, if you're trading the micros, okay, I'm going to trade 4 micros. So my risk is going to be, I've got almost 100 ticks risk, or 87 ticks risk. So it's $87. It's almost $400. Okay. I'm not telling you you should or should not take that. That has to be a personal decision that you make. Okay. But it's certainly going to be a potential trade here. Okay. And it is. So I'm going to go ahead. Okay. So I bought my 4 micros. Okay. I'm going to get my stop in. In the meantime, I'm going to get my orders working above, because I want to try to get out of 2 of them. And bring my stop to break even. But in the meantime, let me get down and get that stop in place. Okay. So now we're just sitting here. And of course, we had a little rush up, didn't quite get us out of the extra one. But that's, again, the plan that we have. And let's just go back since there's nothing else going on at the moment, there could be something in gold, but let's see here. No. So let's go back to our other screen and see. We'll finish up our list anyways. Square oversold, of course, as well. SPY oversold, of course, as well. Tesla, okay, is coming back a little bit, but oversold. WIN is relieving that a little bit, but still oversold. XBI again. So you're seeing pretty consistently everything is oversold. Another good one, if you're looking for one, would be Zoom. If you wanted to look at it, because that is pretty oversold and it stayed down there. Now, that could also be a sign of weakness. In the meantime, one of your accrued, if you took the trade with me, you should have one off with profits. Okay. And now you can go to break even on the balance. Okay. So now you have no risk and you just have a free roll going forward. Okay. So you're out with a small profit with a free roll. It looks like we're going to stop that anyway. So, well, whatever. No, maybe not. Okay. Should. Okay. So we're out. So you made about $12, $13, or if you're trading the big ones, $130. Either way, again, it is what it is. And this is what we're watching. Meantime, not much going on in the overall screen here. So again, there's just not a lot to do. So when there's not a lot to do, you have to be able to be patient enough to sit back and not do anything. Okay. And that's something that's important. But I do think that if you're looking, and I do believe the Zoom, as much as I hate it and think it's going down a lot lower, it doesn't mean that I wouldn't take a trade there. You cannot let your personal opinion or emotions get involved with any trade that you make. And of course, we could get potentially another trade here in crude as another buy. But everything else is kind of quiet. Again, I can't make it busy. I can only teach you how to trade no matter what the conditions are. And of course, yesterday there was a lot more opportunity because it was a lot busier with the tanking of the market. But now we're seeing a natural rally. But it would not surprise me at all if this market turned over, okay, and actually ended up lower on the day. I'm not saying it will, but there's a possibility, because again, this rally, although the numbers are bigger, is relatively weak, and you could see some selling show up once again if they can't get them to burst out once again here. So we'll see. But again, we're really not seeing a lot of opportunities here. This is always the issue, right? We need price and volume. You can see it here and here, okay, which is what we looked at originally. And of course, we don't really have it. Okay, you had it here in the euro currency, but we weren't here for that trade. So again, you have to allow you have to be patient enough to wait for the market to do what it's supposed to do, okay, or what you're expecting it to do, versus deciding ahead that you have an opinion and you're going to force that opinion. That is something that is very important to understand, that you cannot allow yourself to let your opinion get in the way of your trade, because everything should be basically mathematical, basically based on the chart that you're watching. Okay, it doesn't matter what you're watching. This pattern applies to any time frame and to anything that you're trading. It doesn't really matter. Okay, I mean, certainly in equities, I look at them for more in a longer time frame because I'm willing to sell premium. In futures, I want to be a short time frame because I want to be able to react quicker. So these are the things that you're watching for. And again, unfortunately, but we do keep our winning streak alive with another win, trading live, because I don't believe there's going to be another trade. And but we'll continue to knock out winners every time we trade, hopefully. And in the meantime, just have a good week, and we'll see you all back here on Thursday. Enjoy and be careful. Don't guess the market, and we'll see you Thursday, everybody. Have a great week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.